U.S. stock market today. S&P 500 futures edge higher on softer inflation, kept the tone centered on energy and semiconductors. Welcome to your daily market briefing for 2026-04-21. We will walk through leadership, macro context, and what matters next for the next session. Here is the broad market snapshot. S&P 500 down 0.63%, Nasdaq 100 down 0.42%, Dow Jones down 0.59%. Next, the ETF curve set shows where relative strength and weakness develop through the session. Leaders were energy plus 1.45%, software plus 0.44%. Laggards were gold minus 2.83%, utilities minus 1.75%. Across global markets, the session leaned risk-off globally, with broad market retreat across regions. Asia was under the most pressure, with Japan and Shanghai leading the retreat. Stepping back, broad risk tone was soft, with SPX at negative 0.63% and NDX at negative 0.42%. Relative strength stayed with XLE, IGV, while GLD, XLU lagged the board. The stock market fear and greed index is 68, which sits in greed. That is down 2 points from the prior reading. That suggests investors are leaning risk on and may keep rewarding upside momentum. On the S&P 500 heat map, leaders were energy, plus 1.45%, semiconductors, plus 0.75%. Laggards were utilities, negative 1.75%, industrials, negative 1.41%. Policy expectations remain a major driver, and upcoming macro releases is one of the next data points traders will use to calibrate the Fed path. If that data surprises hot, long-duration trades could stay under pressure. Commodity action was split. Crude oil led, while gold lagged, so the move looked selective rather than broad-based. The index board leaned lower, with S&P 500 carrying the weakest tone and Nikkei holding up best. Mega cap curves were mostly negative, which points to a broad tone move more than a single-name story. Forex showed a risk-on currency tone, with the sharpest move in USD/JPY and the best relative strength in AUD/USD. Crypto remained constructive, which helps confirm the broader market risk tone. Bond curves suggest yields were mostly rising, so rates still mattered for the session. The main focus stayed on leadership, stayed concentrated in energy and semiconductors. The pressure point remained utilities and industrials. Tomorrow's setup comes down to the next macro events, yield direction, and whether today's leadership can hold. Follow through on U.S. stock market today. S&P 500 futures edge higher on softer inflation signals. Yahoo Finance also matters because the tape is still sensitive to macro headlines. That is the key takeaway for today's market. Broad risk tone was soft, with SPX at minus 0.63% and NDX at minus 0.42%. Relative strength stayed with XLE, IGV, while GLD, XLU lagged the board. Keep watching policy signals, index leadership, and the next macro catalysts. Subscribe for the next daily market briefing.